What's up guys, welcome to another video. So this video is a tutorial on how to identify any market trend. You know, one thing about the markets, no market is too hard or too difficult to trade. All you just need to know, the first thing about trading the market is knowing your direction, knowing which way the market is going. You know, I suffered this during my beginning time, always confused, not knowing what to trade. But most of the errors I was making was don't knowing the overall direction. So if you don't know the direction of the market, that's when you take a buy. You see that the market went for a sell. You take a sell, the market went for a buy, or the market will range. Why? Why did it occur? Because why? Either you did recognize or you was not able to recognize the trend of the market. Now, these are the three types of form the market can trend in. The three form then the market can trend in. Now the first one, this is what we call a bullish trend, which is right here, and this is called the ranging market, and this is a bearish trend. So these are the three form then the market can move in. Now for the first one, we have a bullish trend. Now a bullish trend is any market that keep creating new highs and respecting previous low. So you can see this market created this high, another high which is higher than the first one. So a bullish trend is when market keep creating new highs. Now you can see this market created this high, new high, which is higher than this previous one, high. You can see higher high. So in a bullish market, the market keep creating higher highs and higher low. So a higher high is when the new high is higher than the previous one. So you can see this high is higher than this one, this high is higher than this one, and this high is higher than this one. Now the low keep getting higher. So this low is period to this one, this low is higher than this one, this low is higher than this one. So in this form, most times you hear higher high, higher low, which is higher high, higher low. So this is a higher high. Why is it a higher high? Because this high is higher than this one, higher low because this low is higher than this one. So in the bullish market, this market should keep creating a new high. I do not want to see this market break a low. Now, this is what I mean. In a bullish market, the bullish market should keep creating a high and not break the low. So this is the bullish trend. This is still a bullish trend. Why is it still a bullish trend? Because why? This market is still respecting this previous low. So this market should keep creating a high. By any chance that this market came and break, if there's any way that this market come and break this low right here, this is not a chance that this market is not changing to a bearish trend or is just a fake out. But most importantly, anytime this market broke a previous low in a bullish market, you know that there is a chance this market can turn, and is a sign that this market is about to change its direction. So that is it for a bullish trend. So for a bullish trend, you want to see the market keep creating highs and higher lows. You want to see the market keep creating higher highs and higher lows. So you can see that is a bullish market. Now the second one we have is a bearish market. Now this market is when the market is falling down, that's just going down in a downward direction. Now in a bearish trend, you want to see the market keep creating new lows. So this is when the market keep creating new lows, as you can see right here, this low after this previous low. So new lows. Now you can see this is first low, we have second low, we have another low, right, and second low. So on a bearish market, we want to see the market keep creating new lows and lower highs. Now this is it for bearish market. So the market should keep creating new lows. So this is first low, we have the high, second low, the lower high, the lower low, and the lower high. Now for this market to remain bearish, we don't want to see this market to break this previous high. Now if this market break this high, there is a chance that this market is about to change its direction. So for a bearish trend to continue, we don't want to see this market to break this previous high that creates what? A low. So this market should keep what? Creating a lower low. Now another area you can hear about a bearish trend is what? Lower low, lower high. Now it's called what? Lower low, lower high, lower low, lower high, lower low, and the lower high. Now this is it for a bearish trend. Now a bearish trend to keep creating a new lows. Do not create what? A new high. That was a higher high. That is it for a bearish market. Now the third one we have is a ranging market. Now this is when the market is not creating new highs and is not creating new lows. It's not creating a new highs, it's not creating a new lows. Now this area when it comes to known as what? A choppy market. Normally known as what? A ranging market. So this is when the market is just trapped within a strong support. So the market is not creating new highs, it's not creating new lows. So it's just within a strong support level. So this is what? A ranging market. So this is a ranging market. Now most times, since if you don't have you have not been in the market for long, this type of market is the type of market you should avoid. Whenever you see this market, just move to the next pair. But whenever you see something like this one, which is right here, which is a bullish market, you know that what? Whenever this market, you see something like this bullish market, you know that what? You'll be looking for an opportunity to buy this market. So this market is creating new high. This market is a bullish market. You know that what? This market is moving higher. Now this market is a strong bullish move. The market is buying. So at this time of this bullish trend, you know what? You are looking for an opportunity to buy. So you are looking for an opportunity to buy this market, whereby you are looking for a market to come to a strong point. Then look for your buy entry confirmation. On a bearish market, this is when you are looking for an opportunity to sell, because why? The market is dropping. So you are looking for this market to come to a strong point for you to sell. In a ranging market, you either stay out. Except you are a professional trader, you understand what the market is about to. That's when you put your head in this ranging market. But for the meantime, you can stay away from this ranging market. So you always stick on what? On bearish market, whereby you are looking bullish market, whereby you are looking for an opportunity to buy, or a bearish market, whereby you are looking for an opportunity to sell. Now I'm going to show you how a bullish market look like, and how a bearish market look like, and also how a ranging market look like. Now, for example, we are using GBP/USD, as you can see. So the first one I'm going to do is a bullish market. So this is a bearish example of a bullish market. Now if you can see right here, we have our first high right here. Now for a bullish market, we want the market to keep creating a new high. Now if you can see, this is the previous high. Now we have a new high here, which is a break of structure right here. Now for our low, we have this low. Now for this market to remain this bullish market, to remain this bullish form, we don't want to see this market to come and take out this low. So we need this low to be respected for this market to remain a bullish market. Now if you can see right here, we have a new high here, and we have a new low here. This is still a bullish market. Secondly, again, we have a new high, and what? We have a new low. We have a new low. Now this is still a bullish market. This is how bullish market is. Now you can see right here, this market still respected this low. You can see right here. So this market put back here, but did not take out this low right here, as you can see. So this is how a bullish market look like. The market should keep creating new highs, new lows, new highs, new lows, new highs, new lows. Now for the market to remain in a bullish form, we don't want to see the market take out any low that created a high. Now for a bearish trend, is the opposite. We want to see market creating new lows and highs, and we don't want to see the market take out the high. Now we use this current market, as you can see right here. This is our first low around here. This is our high. Now for this market to remain bearish, we don't want to see this market to take out what? This high right here. So the market will keep creating a new low. Now if you can see right here, we have our new low right here, and we have another high. You can see. So this market should keep creating new lows, new high, new lows, new high, new lows. Now we have another low right here. Sorry, another high right here. We have another low right here. So around here, this market changed our area, because why? This market broke above the previous high, which you can see right here. So on this particular moment, this is where you put in mind that what there is a chance, there's a high probability that what this market is about to change its trend. Because why? For a market to remain bearish, we don't want to see this market break above a high. So you can see this market has broke a high right here. So at this point, there is a high chance that what this market might create a new high, might change to bearish trend, or might continue a bullish trend. So when the market creates a high, that's when you just put in mind that what this market might change its direction. Because one thing about the market can never be sure about the direction. Even when you take a trade, that trade doesn't mean that's why you have 100%, you have 100 confidence that what this market is going to buy. You can never be sure about the market. So whenever market break the high of a bearish trend, the market can either change its direction to a bearish trend or still continue to a bearish trend. So one thing about this market, despite that take out this high, despite on this strong rejection, this market can either create a new high or it can continue in a bearish trend. So that's for a bearish trend. So I'm going to this is another example for a trend. And you can see this market was dropping before around these points right here, which was a bullish trend. Now before this market change, this was the last high around here we were having. You can see around these points right here. So you say that for this market to continue to be a bearish trend, we need the market not to break the high, but what? Creating new lows. But instead, this market gives us a higher high, which means that there is a chance that what this market can create that turn to bearish trend. And you can see this market did create and did continue that bullish trend. So you can see here was the low, the high. Now this is the last low this market created before breaking above the high. So when this market broke above this high, there is a high chance that this market is about to change in this direction. So instead, what did the market do? The market gave us this high, created this low, and what? Form a new high right here. So this market continued creating that high and respecting the lows. Now new lows, a high, that's a new high, a low right here, and a high, low, high, low, as you can see, high. So right here, this market was what? Showing that what? This is a bullish trend. Why? It keeps giving us higher highs and higher lows, higher highs, higher lows. Then at this point right here, this market starts ranging. Now a ranging point is when this market is not creating new highs or neither creating new lows. So this market give us a high, a low, give us this high, give us a low, give us just a new high. See, this market nearly take out this low right here, so you can see, so which is this low right here, as you can see. So this market created this low, this high, created a low, created high. Instead of creating a new high, so you can see this market did not create any high. So this is what is short, a sign of what? A very ranging market. So this market created this short-term range, so pull back. Now around this point, this market broke this low with a weak rejection. You can see with a weak rejection. can see the weak rejection. Now at this point you might put in mind this market is about to change the direction or might still continue bullish trend. So what you see now, what after market weak this low right here, this market still failed to create a new high, then what created what a new low. Now this is now a sign of what this market now turned to a bearish trend. So you can see right here, created a new low, pull back a high, failed to create a low. You can see the market is never perfect. So that's one thing about trading about the market. You always put your mind that what the trading market is never in a perfect one. So that's why you need to calm yourself down, ask yourself and figure out what this market is doing. Where is this market headed to? Now this market created this low, which is now what failed to take out this previous low. You can see right here that this market failed what after this creating this low right here and giving us what a lower low. This market failed to take out this low after giving off what after creating this high right here. So this market failed to create this low, which is now what respecting this low and what created a new high, which is now what a higher high, which is now higher than this previous one. That's when this market shift in structure and went above. So now this is now in that short time frame buy. So you can see this market created this high, created a low, failed to create a high, drop again, so and so on and so forth. That's how they think about the market. So I'm going to explain it again. For a bullish market, you want to see the market keep creating highs, lows, highs, lows, highs, and lows. This market to remain in a bullish market, this market should not break the previous low that to break any low. So we want the market to keep creating highs and keep respecting the low. Market should not come around this area. So anything that occur like this, anytime that this market take out any low, as you can see right here, take out this low, there's a high probability that this market is about to change its direction. Now for a bearish market, we want this market to be creating a low, high, low, and a high. Now for this market to remain bearish, we don't want to see this market to take out any high. So instead the market should keep creating lows, but should not take out the high. Now for a ranging market, this is when the market is not creating any new high or any new low. So this market just keep rejecting, playing in one spot. So you can see, do not take out any high, do not take out any low, do not take out any high, do not take out any low. So this is a ranging market. Now you should also put your mind on the market is not perfect. So most times when you think that this market is now bearish trend, it will just change its direction. So this market is just most times when you are chasing a foul. So you know one thing about chasing foul. So most times it's hard for you to catch it, but with time you will master the direction about the market. So this how you can identify a trend. For a bullish trend, you need the market to keep creating a new high. For a bearish trend, you need the market to keep creating a new low. Now for each of these directions, when market is about to create a new low, it's going to pull back to a strong support before creating a new high. So on my next video, I'm going to share how to identify a strong support level. So thanks for watching. See you next time.